Hello and welcome into the KE Report. I'm your host, Shad Markowitz, and I'm speaking today with Jordan Roy-Byrne, founder and publisher of The Daily Gold. And we will put a link to The Daily Gold down below so you can follow along with Jordan's work. And Jordan, it's always great getting you on the show just to get your thoughts on the macro environment in the markets and also in specific, the precious metals. And the big news over the last week or two, Jordan, has been a further correction and consolidation in the precious metal space. Now, overall, for the last 6-7 weeks, we've seen gold and to a lesser extent silver and the miners just kind of correcting through time. Now, over the last week or two, we have seen that roll over into a correction in price where things are pulling back. Gold did now dip briefly below 2,000. It's around 1988 at the time of this recording. Silver is down to 23.94, so it has fallen through the 26 and 25 and $24 levels. And even the mining stocks, GDX, GDXJ, have rolled over a little bit. Let's start with gold, though. Overall, it's still at a pretty good price level. While it is correcting, is there any levels you're watching, or are you concerned at all by the correction that we're seeing over the last week or two?
Hey, Shad, thanks for having me. Looking at gold in the daily chart, it hasn't broken 1980 yet. The levels I've been talking about for the last couple weeks, you have 1980, 1950, and then 1900. And then at the same time, I'm also looking at the moving averages where early in a new bull market, gold typically bottoms at the 50-day if it's running really hot. I don't think that's going to happen anymore. So then we have to look at the 100-day and the 150-day. So the 150-day is at 1862 now. That's rising, probably hits 1900 in June. The 100-day is at 1929, probably hits 1950 in the next couple weeks. Looking at a weekly chart or even a monthly chart, those would tell you that we're probably going to see gold go below 1980. And, maybe I just tend to try and be conservative at times, but I think, testing 1900, you could get the 150-day at 1900 sometime in June. So I think that's a potential test there. I mean, if you look at the monthly chart, it definitely looks kind of toppy. Am I concerned in the big picture? Not at all. But, short to medium term, we could definitely, continue the pause here, see some more downside in terms of price. You see silver really coming off, really underperforming gold. So that's a bad sign with respect to, is a breakout in gold imminent? Because if it was, you wouldn't see silver underperform the way it has in the last week or so. So I think we're probably going to see lower prices over the coming days and weeks. But yeah, we'll see how it plays out. I mean, I think, you could see some weakness for, I don't know if it's going to be a month or two or 3, 4, 5, 6 months, but I think we're setting up where this, whether this is a mild or more severe correction, I think this is setting up for the last counter trend move, a real last stand for the bears before the bull market really begins in earnest for precious metals, and first and foremost, gold.
Well, and Jordan, a lot of times it's hard for gold or any asset class to just break out to a new high until it's had some time to consolidate, congest the move it just made, which was a $400 move off of the lows last year. And then that gives you the energy to build and break up through it. And a lot of people were looking at that all-time high level and thought a couple of weeks ago, or even a month ago, that maybe gold would have the stones to get up through that and blast out to 2,300, 2,400. But it's normal for there to be a couple attempts and for the third attempt to fail. But it's more likely that on a fourth or fifth attempt that when gold does go test that all-time high level again, it has the energy coming out of a corrective move to break through it. Is that kind of how you're looking at it, that this correction would build the doubt a little bit and cool things off on the charts enough to where new buying would come in and that would be the catalyst to move it higher?
I mean, maybe. I mean, because gold did have that 8% pullback into March. And, then it was able to run from the low 1800s. Then it made it up to 2000. It's kind of grinded higher. But looking at the weekly chart now, the candle this week, unless there's a big rebound in the next couple of days, is probably concerning. And I think looking at the macro fundamentals, looking at the next couple months, are we going to have issues with more banks? Is the economic data really going to be recessionary in the next couple months? And so I think if we're looking at the next couple months and there's no more problem with the banks and, economic data holds up at least for another quarter or so, then you could get some selling in gold just as a function of, you had all this money coming in, you had the bank failures, you had the Fed money getting ahead of the Fed pivot. And so I think now those catalysts are getting reversed. I mean, I still think big picture is, extremely bullish for sure, but, looking at the monthly and the weekly chart, weekly chart as well, I mean, they do look kind of toppy here. So then it's a question of, how long might we correct for, how deep could it go? I mean, you do have, looking at the weekly chart, there is a gap, I think in the mid 1800s that's standing out. So, I mean, it depends on the macro factors, but it will be a good thing if we correct and hold in the mid 1800s or around 1900. You kind of consolidate there. That will clear out a lot of spec money and certainly put gold in a much better position to be able to move above 2100 and then really sustain it. So I think in terms of the macro, I would say there's more macro reasons why gold hasn't broken out yet than technical. Because also, if you look at the ETFs, there hasn't been a lot of demand. I mean, if you're using it as a proxy for investment demand, there hasn't been a lot in gold and silver in the last couple months or last 5 or 6 months, which, I mean, on the surface, it's a good thing because you don't want there to be too much demand in the market, to struggle, at the same time. But you also need a lot of demand coming in to have that breakout and push the market that much higher. So, I mean, all this stuff, what that's telling me is, we're in need of something on the macro front beyond the next month or two to really get gold moving again. And I don't know if it's going to be, more bank failures. I mean, I think it's more likely to be the economy starts rolling over and then the Fed is forced to cut rates. I think that is really the catalyst that's going to get gold moving, significantly and really trigger the beginning of this bull market. And I think that's not 1 or 2 or 3 months away at this point, based on what I'm looking at today. I mean, it's just a guess right now, but it could change.
Yeah, it makes sense that there needs to be some new macro driver, and with some of the other events cooling down a little bit, the banking and some of the concerns about the Fed and inflation, we're going to have to wait and see if it's the debt ceiling or if there's some other factor that comes in that gets the Fed to the point where they need to start looking at cutting later in the year. And until then, we may just have a soft patch in the metals. We did talk about silver's weakness, but let's look at it a little bit further. Is that the concerns about a recession coming up that's pressuring the industrial side of silver? And is that also why some of the mining stocks have also rolled over a little bit harder over the last couple of weeks, just expecting a cool down in the economy?
Yeah, I mean, it's definitely possible. I mean, silver, if you're looking at the weekly, or if, for example, you're looking at the weekly, it's clear that you had resistance at 26 and then 28 basically, or 28.50. And if you're looking at the price action over the last 1, 2, 3, 4, 4 of the last 5 weeks, silver tested 26 basically 3 times in the last 5 weeks on the weekly chart and wasn't able to break through it. So, I mean, that's definitely concerning. And I mean, could it be because of growing fears of a recession, the weakness in silver and the miners? Possibly, but I think it's a reflection of that gold is probably going to test at least 1900. That would be my guess. I think they're sniffing out that there's more weakness coming in gold. And so, again, I go back to the macro. It's just so difficult because you can't really find a consensus. And not that you need to find a consensus, but you have a lot of people who, well, this is just going to be a mild recession. Maybe we'll have a soft landing. There's not going to be any problems. And at the same time, you have people who are talking about you're going to have this huge deflationary bust coming. So trying to make sense of all these things amid the recent moves is really, really difficult. But I do think that the recession is part of it. And, going into recession, you are going to see gold outperform silver. I mean, the gold silver ratio has turned up right alongside with the dollar. So you get those two markets going, then silver and the miners are going to perform worse than gold, at least until the Fed has to ease. So I think until we see Fed easing, you're probably going to see silver remain under pressure in real terms, and perhaps the same for the miners.
Well, Jordan, another factor I'm looking at is also that the dollar has had a little bit of a bounce, as have interest rates. And so do you think those are factoring into it as well?
Definitely, definitely. In recent months, it's been I hate to use correlations, but we know that very recently and beyond that in the past that, higher bond yields have triggered sell-offs in precious metals, and bond yields going down have been good for precious metals. So I think with bond yields rising in the short term, that definitely puts more pressure on precious metals. And it'll be interesting to see if this rise in bond yields is a false move, like if you're getting a false move before the recession move, because it's something I've been waiting for, months and months and perhaps a year, is for to get this huge decline in bond yields. The curve steepens. Everybody knows a recession is coming. The Fed has to cut. I still think that's coming. But as I said, I think in the first question, I don't think that at this point. That doesn't look to me like it's 1 or 2 or maybe even 3 months away. But maybe when we get to the end of the summer, the risk of that happening will be much, much higher. But yes, at least for now in the very short term, if you see bond yields continue to rise, that will, put pressure on this sector, coupled with the fact that if the market is not thinking a recession is imminent, that's also putting pressure on precious metals, because then you get a little unwind in all of the buying that came about from people who were sniffing out, or the Fed's going to pivot, they're going to cut soon. So, some of that gets cleared out in the very short term. And, the thing with the debt ceiling, I think for precious metals, that could have triggered lots of buying that then will get sold after the fact with whatever happens, like what happened in 2011. So I think perhaps the recent buying that's pushed the market up, I don't want to say it's too speculative or hot money, but some of that money could come out of the sector in the next couple months. But after that, then the sector could be in a much better position in terms of sentiment and macro wise. If it looks like a recession is imminent at that point, the Fed has to ease.
Yeah, so it could be more of a shorter term catalyst, the debt ceiling, where people buy the rumor, sell the news after it's resolved. But sounds like we could just have a couple months slog here where it may be tough sledding, but then after that, we'll have the energy to build up and make a more conservative move higher in the precious metals. So from that vantage point, Jordan, as someone that has followed the sector for a couple of decades, you write a newsletter where you're discussing the stocks that you like and the companies that you're investing in. If you were listening to this interview and you had cash on the sidelines, or if you were only partially invested, or maybe you're just coming and starting to look at the gold sector because you see some of these macroeconomic news factors and you're concerned, what would you be doing at this point in time? Would you be waiting for a further pullback in the mining stocks and in the metals to get positioned? Would you be scaling in and dollar cost averaging? What would your outlook be if you were kind of looking at this from the sidelines and trying to figure out when to get positioned?
Well, if you're talking about the metals and ETFs, I do like dollar cost averaging because timing is incredibly difficult. With respect to should you buy this weakness or wait, it really depends on the company and the stock, because there's some that you might want to buy sooner than others, and there's others that you can wait for. I think the ones you can probably wait for are definitely silver stocks. I've been underweight silver stocks for a while. I still like them because over the next couple of years, I think they're going to do fantastic. But, we could have some short, medium-term risk. And so if you're wanting to put some money to work, I would lean more towards gold producers. That doesn't necessarily mean you should start buying gold producers immediately, but you have to understand that when the next move really takes off, you'll probably have gold producers will lead that. Exploration stocks might lag that, especially if they have to raise money. That's another factor. Look at these companies, look and see who has to raise money, because the companies that waited and are still waiting, they probably missed a window. And so if they're raising money in the next 3 months, their terms might not be as good. So first and foremost, you'd probably see the gold producers lead, but looking at potentially junior explorers, you can probably wait a little longer on those. And at the same time, looking at silver stocks, they're probably going to lag at the beginning of the next move. So those are ones I think you can wait on. And so circling back, for me, I would say the junior gold producers, you'd probably want to buy those first. And considering all those things at the same time, you want to go company by company. because, there might be some junior producers that you should buy in a week, and then there might be some you should buy in 2 months. It just depends on the company situation and its technicals. I mean, big picture, I think we're probably going to see more weakness in this sector over the next month or two. So I would generally wait a little while for lower prices.
Okay. Well, some sound advice there, and some of the stage of companies that you're looking at and the types of companies you're looking at in the sector that you think will have the most torque. Jordan, we'll wrap it up there. It's always great having you on the show and getting your thoughts on the markets and getting some of those technical levels you'll be watching and how you think things could play out over the medium term. And if people like getting Jordan's work, click on the link below to check out the Daily Gold. Jordan is always sending out different videos and writing articles and talking about the stocks he likes with his subscribers. And we sure appreciate you spending a few moments with us here at the KE Report every week.
Oh, my pleasure. Thanks so much for having me.